Well, good afternoon, Maverick traders. It's Joe. It's the 7th of May. Happy Tuesday to you. Let's get into the markets. I'm going to break down what happened today in the meaningful news. Actually, there was nothing really going on. Some technical analysis as this last surge has put us in a really interesting place, and as always, share trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So moving into the market analysis, we really didn't get much. Kind of a little bit of a hesitation after a pretty good spike that actually started on Friday, maybe Thursday overnight. Let's jump into the daily news. I was actually looking for a specific catalyst, and I really didn't find anything that was outstanding. It could just be opportunities in some of these larger companies that had earnings over the last little bit. There could be many reasons for it. I would probably lean more towards kind of an oversold bounce or opportunistic traders, or even maybe chasing some performance based on earnings. But I did not see any real catalyst for the move higher. More of a nothing in the way scenario. So overall, we didn't really do much today. More of kind of a hesitation after a pretty good gap up on Friday and then a subsequent move on Monday. How did we finish? Dow's up pretty much flat. Dow's flat, S&P's flat, Q's flat. Look at the Russells. 0.4, that's probably the smallest percentage up or down I've seen in a long time in that. Oil and gold also flat. So a little bit, hey, let's pump the brakes. Moving over to the advanced decline line, 55% advancing, 41% declining. Absolutely 50-50 there, really not much going on. Blow above the 50-day moving average is 57.43. Let's just move straight into our first chart. This is the S&P. And it's pretty interesting because Rob made mention this on Friday, and then Corey followed it up with yesterday's Roundup. And what I agree with both of them is this last surge that we've seen through this area has been super choppy. I'm just going to draw some lines through these candlesticks. These are all gaps. Every single one of this is a gap up or a gap down that subsequently finished where it did. Here's another one. Here's another one. Here's another one. Every single one of these candles, I'll go all the way back to this point, has gapped. Since this bottom here, I'll go ahead and get to my square out. Since this little bit of a pivot point, every single thing has gapped up, moved higher, gapped up, moved lower, so on and so forth. It's super choppy. Now, the overall motion of the ocean did put us above bearish pattern at this area with this really nice confirmation rolling over, and then it just kind of threw everything off. So it's not quite the formation, or I should say something that I really want to jump into bullishly yet, but it is an absolute decimation to the beautiful bearish pattern or anything that was subsequently bearish with, look at this nice 20-50 crossover. Everything was sloping really great, and the volume was looking to pick up as it rolled over. It just kind of threw a monkey wrench into everything. So the questions that I've been getting over the last few days is why? And the answer is I've got tons of whys. I just don't care about them. They might be right. They might not be right. What we have to do is just continue to follow the overall patterns. Now, there is an area up in here that we've talked about for quite some time. And as you can see, it's right back up into this area. This is where we decided to start to slide our outlook to a -2, -3. It's backed up, a beautiful bear rally here, going back to a -2, -3, and it's just kind of back up into this area. So this kind of got rid of all the bearish opportunities and probabilities that we had since it's above both moving averages. Past that, it actually really hasn't given us any sort of advantage or anything to trade over the last few days. Now, what's interesting, let's move over to the Qs here, because what I thought was pretty interesting is it didn't really erase anything I had on my bear watch or my bull watch. It just didn't confirm anything. So I'm kind of head scratching. That's why I keep thinking maybe this is absolutely just like a short cover rally, or it could just be, hey, let's throw some money into some of these larger companies that had pretty decent earnings, and maybe it's just on pure volume that's pushed us back up here. One thing that I do want to make note of, and this is why I'm not too excited to go to the bull side just yet, is we still have this little bit of a downward slope here. We do have this, this big opening here. It has a very impressive retracement back up to these areas, but we really need to start to achieve this, or we need to consolidate right along that 50-day moving average, or here's that last little part of that, have some sort of a pullback to a previous support level. Now I'm using the Qs for this example, but folks, you could use the SPY or whatever chart you want. So it's just too early to do anything to turn it over back to the bull side. I don't really want to load up on the plus twos, plus threes. I don't want to abandon my bears either. It just really put a pretty good surge outside of a range that kind of throws a monkey wrench into everything. So it's best to just kind of sit on your exposure of the portfolio that you have right now and try not to make any sort of judgment calls until at least the end of the week. It might be kind of painful, but that's probably the most responsible thing to do. Taking a look at the heat map, this one's going to be obvious. I think looking at yesterday's and the day before, we might see some of those outliers, some of the stocks that participated in that surge on Friday and into Monday. But today is obvious, right? We're flat, so we're kind of seeing, but really nothing to write home about. So where am I at? It's pretty obvious. Everything just kind of slid from that negative back up to a zero, and a lot of it had to do with the last few days. Honestly, that if there wasn't a Friday, if you took away Friday, Monday, and today, I would absolutely be at a -1 and a -1 on the week and -2 on the monthly outlook. But isn't it crazy how 2 days can just push above the 20-day and the 50-day? Not a large amount of volume, but the volume was about average. By that 20-50 slope, they're still inverted, they're still crossed. It just seems a little bit too fast, too quick for me. I want it to prove itself, consolidate up here, or at least retest some support levels before I get behind anything super bullish. Until then, I'm just kind of going to sit where I'm at and see how the week ends. So this is kind of where I was drawn. These are the trades that I have been sharing with you guys for the last 3 weeks, 2 weeks, 3 weeks. And they're still on my bull and bear watch list. Not a lot of change. Some have pulled back, some have kind of stabilized, but I'm not seeing every one of my bears go up. And I'm also not seeing all of my bulls continue higher. So it's hard for me to really buy into this last Friday, Monday move. So I'm not going to overreact here. So I'm still sitting pretty, and I do like the trades that I've been following a little bit. That being said, let's take a look at a couple here that I haven't really looked at lately. This is PepsiCo. This I thought was pretty interesting because you could see, let me zoom in a little bit, folks, and share with you that it actually did have its earnings on this day, and a really good gap down, had a big surge up. But take a look at the pattern that it's in right now. It's kind of continuing this little, if you go a little bit further back, it came from a bull pullback, a little of a ascending triangle pattern. Let me get my line a little bit better here. This is kind of what I've been focusing on. It did bump its head about, sorry folks, that is not a straight line. It did bump its head a little higher than that, but I do like how it regained some strength here, right around that 176, 175 level, and it looks like it might be turning to move higher. So this will be on my watch list because I want to see this thing move up to the 179, 180 level with a market that can sustain, gather itself, retest, or show some bullish move, and then push higher. But this is definitely on my list, but it is not anything I'm going to do anytime soon. It's just on my watch list. Let's move straight down to the bears. This is one that I haven't shared for a little while. This is UPS. What I liked about UPS is it also had its earnings right back here. You guys can see it was good. It shot up. I do still love that it's attaining, or I should say respecting, its crossover here, the 20 and the 50 crossover. And it does have this level that it seems to be parking at. Be patient as well, because this last surge that we've seen in the markets have pretty much messed up all of my bearish trade patterns, especially over the overall markets. But if this decides to roll over and break some support levels, I'll be looking for it as a cool bear. Maybe something around below the 145 and a half, definitely below the 146. So we have time when you have a market that is in the midst of a corrective move, has a bounce, and it has the volatility that's been showing us as of late. So I guess that's what I got to leave you with is let's just kind of sit, stay put. We've definitely broken out. We've kind of ruined our bearish setups, or at least over the overall markets, but we really haven't gone back full bull yet. Big bounce in the markets over the last couple sessions, throwing off any sort of bearish trend or pattern. It doesn't matter the why. It's probably a combination of a lot of things. Let's just follow along with the charts. No economic reports this week, and it leaves people in an uncomfortable place when we don't have any sort of economic news or event to worry about, think about, listen to. So then all of a sudden we got a whole week without news. Well, what do? Well, that's where it gets a little bit volatile, so keep that in mind. Earnings season continues with some optimism in the larger companies. Another reason why the markets might have bounced might be a factor in the current market surge, but time will tell, and that's what I love about it. The overall time will tell. If we're patient, we allow these markets to either stabilize or retest. We will see if it's indeed going to stay bullish and we can do bull trades, or if it's just going to roll right back over and we can continue on our bearish outlook before this bounce. That's about all I got, folks. Basically, just kind of sit back, stay patient, and let's see what happens to the markets over the next little bit. Thanks for joining me, and we'll see you guys next time. Bye, everybody.